Okay, so somebody made a recommendation for us to go through supply and demand again, and then somebody else, and then we were looking at going into uh, Wyckoff instead. So I'm just going to give an overview of supply and demand, and then also share how um, we can use Wyckoff at the same time. Okay, so basically, supply and demand is a concept not originally used on the chart. It's an economical concept, a concept of buy and sell. Okay, so for you to understand how to use supply and demand, then you need to understand where the concept comes from. Okay, so supply and demand wasn't made for technical analysis on charts, although it was made for technical analysis, of anything at all, because we deal with exchange of buying and selling. So for you to be able to buy and sell, you do it in supply and demand method. So supply and demand was a concept originally created for business. Okay, so along the way, when the chart was introduced, mainly candlesticks, supply and demand was introduced as well. So the concept goes that when using or observing a price at a particular range. A range is talking about from one point to the other, which is from one specific price level. Like when you say this high, it has a price at this point. All right, so the price level of this high to the price level of this low is a range. So from this point to this point, from this point to this point is a range you're observing. So while observing a range, you understand that it can be divided into two. Dividing it into two gives you a part of premium and a part of discount. So when you know the premium and discount aspect of it, then you can now know where to expect or observe. Oh my God. So you can now know where to expect or observe premium and discount to know the area of supply and demand. Okay, so when you say supply and demand, it's not just identifying this and calling it a demand zone, or identifying this and calling it a supply zone. You need to know why it's being called a supply zone and why it's being called a demand zone. The concept works with premium and discount. Okay, so if you're looking at identifying this as a supply zone, then you need to be well informed to know why it's being called a supply zone, unless you're going to get stopped out like this. Okay, so it's not just any area of interest that looks like a supply or an area that looks like a demand. No, it's a concept. So if I'm calling this a supply zone, it's basically because maybe I'm observing this aspect of the range. And while doing that, this is going to be the premium aspect of it, and this is going to be the discount. So within the premium and discounts, you now identify the areas which you see as supply and demand. But it comes with the range and premium and discount. So those of you who don't know where you use premium and discounts for, it's when you are identifying a supply or a demand zone. Because if you identify a supply zone within discount, you're going to get stopped out. Right? Because discount is for demand zones and premium is for supply zones. Okay. And if you can't clarify these two, is where you get confused and why your zone is not getting respected or why you're not getting the reaction you're expecting from your area of interest. So these are one of the key things about supply and demand. It works with premium and discount. Okay. So in aspect of when you talk about Wyckoff, Wyckoff is a technical method that was introduced some years back, and I've been using this to understand more the movement of markets, and the direction price might be heading into. I don't use it for entries. I don't use Wyckoff for entries. As you can see, if you look at my charts on Wyckoff, I don't use them on lower time frames. I use my Wyckoff on higher time frames. That's because I use them to identify the direction of the market when the structures are looking too messy for technical analysis for smart money concepts to interpret. Okay, so when you have a chart like the ones we are having these days with market looking funny, I use more of Wyckoff to help me understand what is going on or what the higher time frame trend might be doing with a crazy price action. Can anybody give me an insight on what I was talking about in particular?
You are saying when the market conditions look messy and you don't really, you are not really getting the market direction. That's when you use the Wyckoff on the higher time frame
Yes, yes.
to.
Thank you. So Wyckoff is a technical method that helps you understand more of the direction. Okay, because there's this stuff Wyckoff called market circle. Right? This market circle comprises of an accumulation, a markup, a distribution, and a markdown. All right. So this whole system is more of let's say an advanced method of smart money concept, because smart money concepts are concepts. Smart money is not just a concept, it's a combination of concepts. The idea of smart money comes from using a standard that is being used by institutions. Okay, smart money is just another name for these big players in the prop firms and the brokers, those guys who do analysis. So they call them smart money because they invest smartly. They don't just draw lines and just trade. They have their reasons for trading. So their concept entirely is called smart money. So Wyckoff is also known as a smart money concept. Do you guys understand what I just said?
Yes.
Okay,
Yeah.
I can go over it again. I don't mind. I can explain again if you guys need clearer. So you can tell me, when I say something and it's complex, just tell me and I would go over it again. Okay. So the
Okay.
idea we call Wyckoff, the entire idea we know as smart money concept. When you say you're trading smart money, it's not just trading something like this. It's not all about doing something like, and then saying you identify um, change of character, break of structure. That's not smart money. That's just a concept that is understood to be an idea of smart money concept. An idea qualified to be called smart money concept because it's a smart idea. It's not just drawing lines and you're following market structure and you have your reasons for trading. That's why it's a smart money concept. So you're using your money smartly. So a Wyckoff method is also a technical method that can be considered a smart money concept when you use it, in confluence with smart money to understand direction and stuff like that. So this is not smart money. This is just a concept. All right, this is just a concept. Fair value gap is not even mainly a smart money concept. It's an ICT concept. But because ICT is also a smart money trader, we call it a smart money concept. Okay, so when you say you're learning Wyckoff and you use smart money, there's no difference. It doesn't matter. You can be using um, support and resistance, and you're still a smart money trader if you have the mindset of a smart money trader. Do you understand? So it's all a matter of what you use it for and why you use it in the first place. So understanding Wyckoff doesn't bring any complications to your method already that you're using or bring complications to how you understand the market cycle or stuff like that. No, it only gives you confluence, which you can use to now, put together with the one you're already using. All right. So Wyckoff has this circle. This circle we call the accumulation. Then there's a markup, a distribution, and there's a markdown. This point is called an accumulation because it's said to be a period in time when market is accumulating, just a consolidation of the direction. It's not really moving in any direction. It's just creating a range where traders are busy, looking for an entry point. And then at the end of the day, it goes up. So this is a markup. This is not a part of the accumulation. This is now more like a markup. On the ICT aspect of accumulation, manipulation, distribution, it only talks about this part. So you don't get confused. The difference between ICT accumulation, manipulation, and distribution talks about the accumulation aspect of it, the manipulation aspect of it, and the distribution aspect of it. But when it comes to Wyckoff, Wyckoff is talking about the entire circle. You see the difference now. This is also a circle. This is also a period in time when market is distributing. So at this point, there's a distribution because price accumulates trader as well. It's still known as an accumulation because price accumulates trader as well. And then instead of going up, it goes down. But in this circle, there are now patterns which are now identified as the Wyckoff schematics. Those things you use the numbers to, the words to identify. Those things are not either Wyckoff. The entire system is known as Wyckoff, not just those things. Those words are there for you to understand those circles. For example, the accumulation words, you see ARST, spring, sign of interest, and then sign of weakness, sign of strength, all those stuff like that those are concepts that help you identify what's happening on the candlestick. Okay, the entire system is known as Wyckoff. So this is one big misunderstanding that a lot of people have been having to comprehend. That's why they don't know how to use the Wyckoff method. But once you understand these things, it becomes easier for you to navigate. So Wyckoff itself doesn't contradict price action, right? It's not any special tool that you can use and say because you use Wyckoff, you don't have to pay attention to what the price action is doing. For me, I use Wyckoff mainly to identify what's happening on the higher time frame, like the entire circle, like this. Right, so if we look at this point, we can say this was a high, price cleared that structure from here. So this was the first break of structure. After the break of structure, we had this high, which we traced this low, then created this high, then this low. All right, now for me to understand what was going on here and maybe why price broke this low, to create this new structure. Let's take this out first. Let's leave this. So don't pay attention to what happened here. Let's pay attention to what happened here. So for price to break this structure here, and for me to understand what's going on here, because as you can see, the structure is different. It's broken here. So Wyckoff gives you a bigger understanding or a different perspectives of saying maybe this is not a downtrend and this is just a retracement. There are two things when it comes to a change of character. It could either be a retracement or a reversal. You can write that down if you're jotting. Price could be doing two things when it comes to a change of character. That is when it comes to a change of structure. Like this structure is bullish. For it to change to bearish, two things could be happening. Is either is a retracement to continue this structure, or it's a reversal to invalidate this structure, which is the trend is changing direction. So these two things are the two major stuffs the structure can do when it's not following the trend. Is either it's retracing to maybe fuel a higher time frame perspective, or is reversing to change the higher time frame perspective. So when it's retracing is when you see things like this, because it's still bullish. It's just a retracement. But when it's reversing is when you see things like this. The price was bullish and then it reversed bearish. Okay, so you have to understand these two things so that you can identify a retracement. This is a retracement. This bearish movement here is a retracement. This bearish movement here is a retracement. This movement here is a retracement. But the entire trend was still what? Bullish. So in bullish trends, we have bearish retracements. And in bearish trends, like this one, we have bullish retracements. The bullish retracements retracements in general happen in corrective price actions. So when the market is retracing, is happening in a corrective price action because it's not following the trend. The trend itself is going to be impulsive. That's where you have the concept of impulsive and corrective price action. If the market is correcting in this form, it's likely a retracement. So as you can see over here, you have this impulsive move down. We have this impulsive move down as well. We have this impulsive move down. And then we have this retracing move up. We have this retracing move up. And these are known as retracements because they are corrective and the trend was still overall bearish. Mommy, when I check it, bless that don't they come when they call me. So I think my dad is at the gates. So the concept of corrective and impulsive price actions help you to understand what the trend is doing and what is the actual trend at that particular moment without going to the higher time frame. So when you're looking at this structure here, how do you tell the trend is bullish? As you can see, the impulse of the market was on the bullish side. Okay? And the corrections of the market was on the bearish side. So that simply means the trend is bullish at that moment. But don't get yourself confused. This trend are different on each time frames. For example, if you look on the higher picture, when you look at the bigger picture here, you have this as a correction, this as a correction, this as a correction, okay? And then you have this as an impulse, this as an impulse, this as an impulse. And then when you look at it on the trend aspect, what do you see? You see this, which means the trend is bullish. So this point becomes the correction. And then this entire move becomes an impulsive move. So you can actually tell the trend of the higher time frames from a lower time frame if you know what impulsive and corrective price actions are telling you. Okay, so all these circles, Wyckoffs can help you understand what's going on at this point, which is an accumulation, a markup, a distribution, a markdown, an accumulation, a distribution rather, because you can see the UTAD here, a markdown, an accumulation, a markup. Okay, so Wyckoff is kind of like explaining the market circle for you. That's why I use it for, not for entries. But you have people that use Wyckoff on the lower time frame to identify smaller market circles and then take their entries on the last point of supply or from the spring. Right, so this is outside understanding what the meaning of each of those words are talking about. This is more of understanding the use of the schematics and the patterns of Wyckoff. Are we following?
Yes,
Sure.
yes.
Yeah.
So we
Yes,
just talked
bro.
about a few things. We talked about premium and discount. If you were to understand premium and discount of this higher perspective or this bigger picture, you have to identify the range. Identifying the range, you now have to identify the premium and discount of each range. You see? So all these red areas are known as discounts. The ash areas above are known as premium. So you look for bearish areas of interest on premium. Okay, so you look for bearish areas of interest on premium and you look for bullish areas of interest at discounts. So when you're trying to understand what the chart is doing, there's no rule that says you should look at just one perspective. Looking at just one angle could lead you to become delusional on the direction of the market. You can use different concepts to understand what the chart is doing, so you can have more confidence on what your next move should be. Like understanding premium and discount now, and I know I look for supply demand zones within discounts, makes me see this area of interest as a more valid one. You see, because it's resting at a swing low, okay? And it's also within discounts of multiple range. As you can see, this was an entry opportunity here. This was also an entry opportunity here. This was also an entry opportunity. So as long as if price was still within this area, and let's say this move has not happened yet, or we had just this move or this move, as long as it has not gotten into premium, which is the selling areas, as you can see, there was a retracement here, but there was no major retracement other than this one, since price was within discount. And that retracement came in as a result of this range. Let me take this one out. So as a result of this range you have here was why price retraced from this point, because this was the premium of this particular range. Do you see? So premium and discount might not give you your understanding of POI, but it can tell you where to look for supply and demand areas. So this becomes a supply zone, as you can see, because this structure you have here. I think my mouse is having some issues. Okay, this was a lower high with a lower low. So even if price was changing direction to bullish, we were still bound to have a lower high from here that would fail to break this low, which now makes this a weak high for price to go bullish. So you see, the whole concept, every concept, they are all smart money concepts. So how you combine them is up to you. There's nobody that said you should use just identifying strong highs and weak lows to trade. This is for your analysis. For your trading, for your entry, you can use as simple as looking for a pattern from your area of interest. For you to enter a trade, you just need to understand what's going on here. You don't need to know everything like all this. For you to enter a trade from this area, you just need to know what's happening here. But for you to know what's happening here, you now need to know what's going on here. So why you use all these concepts for you to understand what's going on. So when you go to the lower time frame, you can know why you're looking for a quasi-model pattern from here to sell from this area, or why you're looking for a continuation pattern to buy from this area. Do you understand? So when you're doing your analysis, that's when you combine different concepts together to have a confluence of the direction. And then when you're looking for entry, you focus on just one thing, what you're trying to see and why. Do you understand?
Yes.
So,
Yeah.
Wyckoff itself has different, but they are all linked together. Different systems like the distribution, the accumulation, the markup, which we're going to be looking into individually. We would have a day, we would focus on why accumulation is all about, because within accumulation, we have the reaccumulation, accumulation 2, accumulation 3, and how to get an accumulation pattern which is not yet recognized. Because these patterns that you're seeing people identify, or they're called accumulation 1, 2, 3, was accumulation system that was identified. But at the same time, you could see an accumulation which doesn't look like your traditional pattern. So the same way we have that for the accumulation, we have the same thing for the distribution too. Okay, there's a distribution 1, 2, 3, and then a redistribution, a redistribution 1, 2, and 3. And all those things, they're not hard. They're not hard. If you understand what a distribution is, you would understand what those things are. So the basic concept of Wyckoff, first of all, is to understand the market circle, the circle of an accumulation, and then the circle of a markup, the circle of a distribution, and the circle of a markdown into Wyckoff. So you guys would have that proper understanding of it from the videos. Then you can now take your time to study them from the ebook. From there, you could know how to also use Wyckoff to understand market circles and reversals and the trend. So any questions so far before we move forward? Any misunderstanding or, see, there's one thing you need to understand about information. And information can be true, but misinformed. So you can know smart money concept, but you're misinformed about how to use it. You can know Wyckoff patterns, all of that, but you're misinformed on how to use it. So information can be true. Doesn't mean it's false. Doesn't mean it's not true. It's true, but you're misinformed. That's why it doesn't work. Do you understand? So some of you might be having issues with your smart money. Don't feel shy to ask about it. You might be surprised to find out that there's a little misinformation you have in your information, which is why it's going wrong. Do you understand? So you should be observers when you're trading. I think even in life, you should observe, because when you have a little misunderstanding of what is going on in your surrounding, you could get misinformed, which could lead to you taking a wrong decision. So information can be true. It doesn't mean it's false. It doesn't mean you're wrong, but you're misinformed. You could be going the right direction, but you're using a wrong route. Do you understand?
Yes.
Okay, so let me see. The key concept of Wyckoff you need to understand is the concept of supply and demand, which I just explained to you. The concept of price and volume. I believe most of you understand how price works. Like I just explained it already. It's more about understanding the range, because for you to be able to use supply and demand, you need to understand the range of which the market is in, or which range you're looking at. So for you to be able to apply supply and demand, you need to understand the range. But for you to be able to apply supply and demand to Wyckoff, you need to now understand price. You understand? So that price is just a different tempo range. On Wyckoff is more called price, but it's the same thing. So you study more of price action and the concept of supply and demand within the range. So you could know how to apply supply and demand mainly. So when you know how to apply supply and demand, then you know how to identify the range and then the market circle of which the market is in at that moment. Is it in an accumulating circle or a distributing circle, or is it in a corrective form? Is it an impulsive form? These are things that put together the concept of Wyckoff, not just those STAR, UTAD, those are the subjects of Wyckoff. Those are like not the very important stuff, because you could understand the market circle, but you don't understand what those words are individually, but you can then identify them. I remember when I started using Wyckoff newly, I didn't know the meaning of those stuffs off my head, like just saying it like that, but I could identify them on the chart. So that just proves that you can understand the market circle. Even without understanding those words, you can now identify what you're doing. So Wyckoff is not that hard. You just need to have a better understanding of it. You understand? So the key concept of Wyckoff is supply and demand, the range, and then the circle. And then when it comes to volume, volume is an important tool that can be used in Wyckoff as well. For me, it's easier for me to use RSI, but this is not is not needed for you at this moment because you're still at your learning stage. So it's a volume that helps you to identify the momentum of the price. As you look at this, you see you see how it aligns with this. So at one level, I remember when he was developing this at the early stage, he also recommended it for me to also try out and see how it works because I knew how to use Wyckoff. So when we go deeper, in the coming weekends where we have more sections together to learn, I would also show you guys how to use the volume and how to use this in confluence of understanding your analysis. So when you post analysis, you have a better understanding of it and all that. These classes are more of, you can say, mentorship on Wyckoff because I'm going to be posting it on the YouTube as well. I'm doing my mentorship for this year for free. Then I'll focus more on private mentorship for the public. Maybe anybody who wants to have a private mentorship with me, we could fix the 3 month class, just one-on-one, and then I will train them. But publicly, I will be recording these classes and then posting them on YouTube so anybody can easily learn because the trading industry is growing very big with a lot of misconception. Like I said earlier, information can be true, but greatly misinformed. So the public out there are having a lot of information to download from trading, but majority of them are misinformed. So we have to try our best as well. When we try to give charts, we try to identify stuffs clearly. So people can also learn from your chart, not just look at where you're looking for areas of interest. You can greatly give details to why you point out those areas of interest to them so they themselves can also understand what you're doing because most of them could just be looking at your area of interest to buy and then they place their sales and entries, but they do not know anything concerning how you got those areas of interest. So like you see my charts, I give details on why I do those things. These things are there to help the public understand why, and so they can do it by themselves too when they're free. You understand? So there are different phases in Wyckoff. We just talked about three things. I did an introduction to Wyckoff market circle. I gave you the key concepts of Wyckoff, which is supply and demand, volume, and the range. The market circles comprises of accumulation, the markup, the distribution, and the markdown. You can be jotting this down or you could watch the recording again and then understand them. Then I am going into the phases of Wyckoff, and this is where we stop for the day. Next week we'll continue. There's phase A, phase B, phase C, phase D, and phase E. So the phase A is the initial point of the buying and selling, or buying or selling. Well, I think we have less than 1 minute now.